Hello and welcome to the look ahead for Wednesday, the 12th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So the big focus tomorrow will be on US inflation figures, US CPI. We also have Federal Reserve Chair Jerome Powell continuing his semi-annual testimony before Congress, and we also have Fed Waller speaking. As far as the economic calendar is concerned, with European releases relatively quiet, we do have Bank of England policymaker Green speaking, and then on the earnings calendar we have Cisco, CVS, and in the UK, Barrett, Redrow will be releasing their numbers. But as I said, the big focus tomorrow is going to be on US inflation figures. Expectations are for US inflation to stay steady at 2.9% year on year, in line with December. On a monthly basis, we are expecting inflation just to ease slightly to 3% down from, to 0.3% down from 0.4%. Now, obviously, we'll also be listening to Federal Reserve Chair Jerome Powell as he speaks with the US Congress. Obviously, he's been speaking today, and his message today was very much in line with what we heard at the Federal Reserve interest rate decision and the press conference thereafter, whereby he was suggesting that the Fed was in fact in no rush to start cutting or to continue cutting interest rates after reducing interest rates by 100 basis points in 2024, at the latter part of 2024. And as we see the US economic exceptionalism continue, the US economy has been holding up extremely well and is expected to continue doing so. We've also seen that the jobs market is strong. We saw unemployment unexpectedly ease to 4%. So the figures are pointing to reasons for the Fed to stay on hold. And to be honest, the data tomorrow, if it comes in line with expectations, will continue to show that as well. Now, here we're looking at gold. We've been watching gold. Obviously, that's tightly connected with the trade tariff discussions that's been going on. And what's really interesting is the fact that gold has been pushing higher, despite the fact that we've seen sort of Federal Reserve rate cut expectations rein in, and that we've seen the US dollar remain relatively high. So this is an area I'm going to continue to be watching. Obviously, we have seen gold reach an all-time high of 2,940. We have actually seen it come away from that all-time high that was reached, and it's fallen quite sharply today, reaching a low of 2,880. Now, interestingly, we've seen the RSI on the gold charts on multiple time frames is overbought. So, you know, there is some expectations to see an easing back in gold prices. But, you know, it's been a very strong rally up with a series of higher highs and higher lows, breaking above important resistance levels. So, I mean, a pullback or it can be completely expected. We're not seeing anything that tells us that the uptrend is structurally over. So we would need to wait for further signals for that. Otherwise, we assume that this is just a pullback. As far as supports are concerned, on the downside, 2,880, that's the level I'll be watching out for. It was around today's low and also the high that we saw sort of in the beginning of February. If we get a break below that, then we've obviously got 2,850 on the downside, the round number ahead of the 2,790, which was the previous all-time high. But on the upside, and I think, you know, even whilst we get down to that level, that's below there, we'll start to see things become a little bit more neutral, but the uptrend will remain intact whilst we stay above that level. Buyers are going to look to rise above the 2,945 to continue to all-time highs. Now, if we have hotter inflation and if we hear from Federal Reserve Chair Jerome Powell, who does talk about that hotter inflation as a reason to really keep rates on pause, then we could find that gold does come under pressure tomorrow. The other thing to be watching out for is, let's just have a look at what's going on with US stock market. Again, although we've had these concerns over trade tariffs, and we've got this idea of the Fed potentially may not even cut rates this year. I mean, that is very much a realistic outcome of 2025, is that the Fed may not cut rates. And that is slightly more hawkish than what the market's expecting. At the moment, if we do get that sort of hotter inflation and dovish comments from Federal Reserve Chair Jerome Powell, hawkish comments from Powell tomorrow, then I think we'd be watching this support here, the 50 SMA, which has been holding up pretty well over the past couple of weeks. We've seen a couple of spikes below to the 100 SMA, which is the next level to be watching. So that's at 6,000. It's also the round number. So below that, we've got the 100 SMA and also the horizontal support at 59.15. Break below there could create a steeper sell-off. On the upside, though, if we see that inflation comes in line with expected, or even in fact cooler than forecast, then we sort of hear Powell reiterating his same message today, which was relatively neutral to a degree, that we knew that the Fed is in no rush, because we heard that from the meeting. So on the upside, looking for a rise towards 61,000 and 61,030 to fresh all-time highs. Okay, and then the other thing to be watching out for is the US sterling US dollar. As I mentioned, we've got MPC member Green speaking. Now, if we just have a look what's going on here, I mean, this is, we obviously had the Bank of England interest rate decision last week where they cut by 25 basis points, but there was some dovish twists to that. And one of those dovish twists was Catherine Mann, who is a Bank of England policymaker who actually spoke today, but she voted to cut rates by a larger than expected 50 basis points. And that actually gave the dovish twist to that vote. She was previously one of the most hawkish members of the MPC. Now, she said the reason that when she spoke today, the reason that she's cut that, changed her positioning on rate cuts, is because she actually sees inflation cooling back to the 2% level next year, due to subdued domestic demand. So basically, she's expecting to see interest rates drop to that 2% sooner potentially than initially thought. And that's why she voted for that larger rate cut. Now, obviously, we've got Green speaking tomorrow, Megan Green. So it'll be interesting to see what her comments come next to what we've heard from Mann. But we have seen a slight pickup in the US dollar, in sterling today, on the back of that US dollar weakness that we're seeing. So, but I think the important thing here is that it's failed really twice now on 2 occasions to push above the 50 SMA. So that's keeping the price under pressure. If we do sort of levels to be watching on the downside is the 123. If we get below the 123, which was the low for April, then that's going to open the door to the 121 low that we saw back in January. But this recovery, it seems to have run out of steam. But, if buyers were to get over that 50 SMA at the 125 level, that would open the door up to the 126. And then just finally, with all this talk of trade tariffs, we've got to keep an eye on the euro. Similar to chart, not too dissimilar to the sterling US dollar chart. Same sort of picture going on. We've seen this sort of failure to really rise meaningfully above the 50 SMA. Obviously, today we heard that the European Commission would retaliate on trade tariffs that have been implemented by Trump, or will be as from the 4th of March. There's going to be 25% tariffs on US imports of steel and aluminium into the US. And that's basically, if we think about European exports to the US from aluminium, that makes up around 15%. So the EC have said that there will be a retaliation. Obviously, that does raise concerns over trade friction. And we heard from ECB President Christine Lagarde yesterday, who sort of warned that trade tensions and trade frictions create uncertainty surrounding the inflationary outlook. Otherwise, the ECB have been quite content that inflation is cooling, the disinflation process is well underway and cooling towards the 2% target. However, there are some concerns surrounding the trade outlook, which could make the inflationary outlook uncertain. Now, again, on the weaker US dollar, we've just seen a push back over that 103.30 level, which is the November low. If I just pull in this here. If we can get it back above there, but really for any recovery to be continuing, it needs to get above the 50 SMA, which is at the 104 level. Above there, you got 104.50, and then this 105 resistance zone on the upside. It'll take a rise above 105.30 to create a higher high there. But on the downside, if we do see failure to really rise above the 103.40 level, 30 level meaningfully, or close above there, on the downside, watch out for 102.50 on the downside and 102. So I hope that you've liked everything that I have shown you, and I look forward to catching up with you again tomorrow.